For Your Money is brought to you by NelsonCorp Wealth Management.
It's now time for Your Money. We're joined by Nate Kreinbrink, financial planner at NelsonCorp Wealth Management. Welcome back, Nate.
Thanks again for having me.
So there's been a lot of talk about the job market lately. What does the data tell us about where things stand?
Well, there were a few things earlier this year that did start to create some worries. Most notably, the rise in the unemployment rate and some announced corporate layoffs. Now we fast forward to today, and this isn't necessarily the case, as some of the data that we've been tracking has actually shown a positive outlook. Now the Cleveland Fed has a neat little tool that actually tracks large layoffs and plant closures in real time, which I think we have a chart here that goes into this a little bit more. So what we're looking at here is the WARN factor. This stands for the Worker Adjustment and Retraining Notification. So as you can see on the chart, the factor kind of tends to spike during recessions when companies start laying off more workers, like you can see by that big spike in 2020. We saw a moderate rise last year, but it has kind of since turned the corner a little bit and has now been decreasing rather rapidly coming into 2024 here.
So what does this mean for the average investor?
Well, I think the big takeaway is that we're seeing a strong labor market, meaning a recession in the near future is a little less likely than maybe what it was earlier this year. This also could be a nice little tailwind for the financial markets. So a strong labor market usually tends to support corporate earnings and consumer spending, which are both key factors in the stock market. And again, we always want to kind of remain cautious with anything that we're looking at with this. But again, I think the economy has shown that it may be a little more resilient than what some people had maybe feared.
All right, some great advice there, Nate. Thanks for joining us.
Again, thanks again.